Hello everyone watching this video. Good morning here from Nigeria. My name is Benjamin. Okay, I'm a Nigerian and a very proud one at that. Alright, and today I thought I should share a video on my personal entering strategy. Okay, first I've randomly picked some specifically pick some area, okay, of reversals, okay, and I'm going to explain what's happening there. So let's say, for instance, we are on a downtrend and the market is going into an area of interest, okay. Let's say here is an area of interest where I'm expecting the market to go down. This is what I want to see at the area of interest, okay. So what I want to see is a bullish candle into this zone, okay, probably into this zone, all right, or slightly out of the zone, okay. Doesn't matter if there is pin or if it closes outside the zone, probably into this zone or slightly out of the zone, okay. Next, I want to see the market trade back below the low of this candle, okay. This is what the technical traders actually call false breakout and other stuff, okay. But there's a story behind this move, okay. There's a story behind this price movement, and that is what most technical tutors will not tell you, okay. It's a story here. So sometimes they say look for a bullish engulfing candle, okay, and then they close below the bullish engulfing candle. Okay, that bullish engulfing candle is not just a name. There's a story behind the bullish engulfing candle, and that is the strength of your entry. Okay, that is the secret of the candlestick. Okay, that is what builds your confidence in your entering. Okay, you don't just trade those candles. There's a story. If the story is not there, that bullish engulfing candle is as well useless. Okay, so once you see that move, once I see that move, I take my trade without fear, okay, without any fear, and just keep my stop loss slightly above the high of that candle, okay, above the high of that candle. There's no specific price above the high, okay, because it's possible that after the break, okay, the signal will repeat itself. All right, to repeat itself, and finally this last move then becomes a signal. And once market trades above this last move, so we want to see the market come down, okay. So this should be the first signal. It's possible that as price traces back into the zone, okay, something that looks like what they call the MO pattern, okay, the M pattern, sorry, Nigerian tongue, something like look at the M pattern, okay. It's possible it will go above the zone, okay. It's possible price could go above the zone and still slam, okay. It's very possible this will happen. So what I want to do is watch out for the price action above this zone, okay. Watch out for the price action above this zone. So there's no specific area for my stop loss. Once this candle forms, okay, I want to see what happens to the next two candles, at least the next two candles. So most times I take my entering from the hourly time frame, okay, and if I want to be aggressive, I just move into the 15 minutes time frame and see what's happening. Mostly if I'm expecting the reversal, alright, I move to minimum the 15 minutes time frame. I don't like going to the 5 minutes and the 1 minute time frame. My minimum time frame is this, okay, unless I'm doing intraday, I'm trying to catch every move, and then I go less. So what happened here is this right here. Just take these guys out, okay, let's take this one out. So like I said again, what you want to see is a bullish candle, not a bearish candle. A bullish candle into the zone, okay. What you do is mark the origin of the move, the origin of that candle, and watch out for price to trade below the origin of that candle, okay. Some features of the candle is that one, it has to be long, very long. Okay, it has to be long. Okay, elongated candle, as we see on VSA, and sometimes it has to be much longer or elongated than the previous candle. Okay, the previous one or two candles. Okay, this is just the tip of the entry strategy. There are other things I watch out for, okay, but that you'll get on my paid course. I'm just trying to give you a picture of what the ideal strategy looks like. Okay, so it has to be longer than the previous candle. Okay, like this guy right here, assuming there was a reversal zone here, but you see that this candle is actually much elongated than this candle right here. Okay, so this can give a very valid setup, and once price goes down and trade below the zone, you are good to go, and just keep your stop loss somewhere above the zone. You may want to double this candle move. Okay, this is 54 pip initial stop loss. You may want to, okay, initial stop loss 54 pips, and as price goes back into the zone, which normally happens, not all the time but most of the time, you want to take your sell entry and set your specific target from 10 pips to 20 pips. Okay, I do my analysis on the daily time frames, weekly and monthly, then go down to 4 hours. The top down approach actually from the monthly to weekly and daily and 4 hours, and I take my entry from 1 hour time frame and 4 hours time frame. Okay, so what you see here is this right here. Okay, so for instance, this a reversal zone, and what we see is a bullish candle. Okay, it doesn't matter if it's an indecision candle or whatever. Okay, a bullish candle coming into the zone, the high and the lows has to be very long, okay, than the previous candle. And once price trades below the candle, you want to go short and keep your stop loss initially above the candle's high, okay, or the area of interest, or the area where I selected as area of interest. Okay, for instance, let's say this area was the area of interest. If you're going short here, okay, you want to keep your initial stop loss above this area of interest, because there are chances that on the price will still rally, just initiate a false breakout and price starts going down. Okay, so immediately price comes down 10 pips, 5, 10 pips, 20 pips, or you want to take some profit, or you want to break even and allow the trade to run. Okay, so I don't waste so much time on this video. It's already 8 minutes. Sometimes when I want to be aggressive, I just move into a much lower time frame, like I said. Okay, for on the 30 minutes, this becomes my entering candle. Okay, once price closes below this bullish candle right here, okay, I want to go short. All right, so for instance, this bearish candle, you see this candle is actually much longer than the previous candle. So at the break of these highs, I want to go long and keep stop loss below that zone. Okay, so just look for more. This is a bullish candle. Okay, this is 49 pips, and this is about 45 pips. So this is actually longer than this. Okay, the break of this bullish candle at this area of interest, okay, finally becomes entering your area to enter to go short. Okay, so that's how it is. Let's take a quick preview of the current market. All right, let's take a quick look at what the market is doing. I believe if I go to a much lower time frame, there's an entry here. Okay, there's an entry here. So let's see this 30 minutes, 8:18. Okay, all right, this is right here. So this is the most recent. This is the most recent elongated candle compared to the previous candle right here. So once you see a break below this candle, okay, probably a close. All right, a close below this candle, we want to go short. Mostly once we're looking to sell. All right, once we're looking to sell, we want to go short at that zone. Okay, so like you see, this price actually broke above the area of interest before giving the sell signal of 67 pips. All right, so I hope you get what I'm saying over there. So on my last post I said I was going to go long on GBP CAD at these zones. Okay, so I've reviewed the analysis over and over again. It's possible, okay, it's possible price will come into this zone right here. There's an area of interest here. All right, so at this price zone and at this zone, okay, on the 1 hour time frame, I'll be looking for opportunity and possibly market moving into this zone finally. Okay, I'm not expecting to go below this zone. So at these zones right here, if the market comes down, I'll be looking to go long, okay, based on my entering strategy. All right, so for now let's watch out for this price zone I marked on my video. Okay, let's watch out for this price zone I marked on my post, on my previous post, the 60-40 area and the 60 area. Okay, and probably here, the deeper the better. Okay, the deeper the retracement, the better the chances that it will go up. Okay, so I hope you enjoy this video. If you want to take on my trading course, it goes for normally goes for $300 in Nigeria. That's 110,000 naira. But I could give it for now, okay, for anyone who is interested, for $270. All right, $270. Okay, I don't think that is much to earn anyone financial freedom. Okay, I don't think it's too much for anyone to pay to become financially free. $270, that's what it is. Okay, pay $270 and set yourself free from unemployment in your country. Okay, is a price tag. Is a price tag, $270. Okay, if you're from Nigeria, you're looking at 100,000 naira. All right, so if you're interested in my course, just PM me, message me, and I'll make some videos and give you details on what's happening on this price movement and why the market is going up and it's going down. Okay, I'll give you logical reason on why the market is going up and down and why I could hold my trade, okay, on my last forecast for some time. Alright, so trading is not difficult. I have spent over 7 years, okay, trading, and I don't just want to trade in any indicator or crossing of any indicator or a trend line break. I actually want to know why the market is going up and why it's going down. Okay, it's like it's not easy actually. It's like I'm trying to know how God made heaven and earth. All right, so this is crazy. Okay, what you see right here is crazy, and there's a lot of story going behind this price movement that most of us don't know. Okay, and which I believe on trading has to be logical. Alright, and then once it's logical, from there you can bring in your strategy. Okay, so it's good you know the reason why after this so much buying here. Okay, after so much buying from the public and the banks, and suddenly it slumps. Okay, there's something happening here. After so much selling here, the market starts going up. It's crazy. This should continue. Like actually looking at the market technically, this should continue like going down all this way, but no. Okay, the market doesn't work like that. Alright, so if you want to know what's happening behind the candlestick, behind the screen, what the banks are doing, okay, how they print this chart, you want to pay $270 and get yourself financially free and make the forex market your ATM machine. Okay, so let's not forget to watch out for this zone. Okay, most especially this zone. This zone is much stronger, so a spike into this zone will probably send the market up. Alright, so minimum here. Okay, I'm not expecting the market to go below this zone. So if you're taking this trade on a much longer time frame or long term like I do, if you're entering this trade right here, okay, you want to keep your stop loss below this zone. Okay, any other further price movement should give us an opportunity to add to our initial trade. Okay, as we expect the market to rally back into this zone. All right, actually expect the market to rally here. Okay, so the market to rally back into this zone and probably here. Okay, enough of this down movement. Okay, a lot of money has been made here. It's time for the market to go up. Alright, so